Welcome back to the channel. My name is Brad, and today we're going to talk about retiring on less money. If that's what you're looking for, stick around. Well, first of all, none of this is financial advice, legal advice, or any other advice. This is just Brad. Some of what I'm doing personally, and we're going to talk about some different funds. We're going to talk about leveraged funds from Roundhill and leveraged funds from Rex Shares. As some of you know, if you've been following for a while, I sold my AIPI and I sold my FEPI. And I did that because I think, well, I know that we can do something maybe just as good, if not a little bit better, using a little bit of leveraged funds and possibly picking some individual stocks and getting rid of some stocks that maybe were not just the best stocks to have in a fund. That's why I did it. I also got rid of my SPY just because I wanted to build out some other funds. But let's take a quick look at where I'm at real quick in my portfolio of just my individual ETFs with that little bit more risk, but not much. And we'll talk about it. So in my account, I hold all these funds. You can see them. I've already, distribution-wise, made $1,100 come on Monday. I want to have more than what I'm going to take, which is 10%. I normally live on 8%. If you've been watching the channel, I usually take 8% and I reinvest the rest. In this case, I'm going to take 10% and reinvest the rest. That is what I'm doing, and I'm going to rebalance this every few months. Now, this is all in an IRA, so I don't have to worry about taxes until I withdraw. You might want to be able to consider some of this for yourself. If I look at these funds, I'm going to put money into BTCI. Everybody knows that I'm a Bitcoin fan. I think Bitcoin will go up with the global M2 money supply, and we're just going to put any extra 50% into BTCI and 50% into Cashi. Why Cashi? Well, I want to hold a little bit of cash so when I rebalance the funds, I have a cash to help rebalance them. But I'm still going to take 10% on the total portfolio cost, not worth. You can also see, and this was before the market even opened today, that I'm up. My current price is $26 compared to $26.11. I'm up a little bit, and I've already got those distributions. I'm not reinvesting them. And then once I get the money from FPY and PLTY, I'm going to buy that BTCI, but that will increase July's target, not June's target. And you know, if I buy it this week, then I will also get some BTCI distributions so I can reinvest that. Also, just keeping that in mind, just stacking a little bit. But let's talk about leverage funds. This is where I've been sitting on the sideline watching. We had a market downturn. I'm like, okay, let's not jump into anything. Let's watch these for a little while. And I'm going to continue to watch the ones from Roundhill, at least for now. Because I started looking at these going, what are they doing and what are they doing different? Now, everybody knows I don't really like the XDTE and the 0DTE products from them. And that's because of certain P&L logistics that they have, how they have to pay certain things out at the end of the year. And I'm going to go ahead and say, no. I am a bigger fan of T-Spy because he does things a little bit different. And if you haven't been watching, he's actually been beating the market over the last month or so. So keep that in mind, that sometimes you got to think about what's going on and not just take things in an isolated period of time. Just keep a broader thought to the process. Now, Roundhill. Let's dig into Roundhill here. Okay, they came out with these weekly payers, and you know deep down inside, I am not a XPay fan because XPay, let's break this down, pays you 20% no matter what. We know the S&P 500 on average only goes up 12%. So 20 is greater than 12, leaving you 8%. Well, that 8% is going to come out of your NAV. That's how it works. Not a big fan of XPay. It does have a very, very good use case. It does. I'm just pointing out that, hey, I'm not going to totally beat up on XPay. It does have some very good use case because it's going to be very tax efficient. And if you're going to sell shares anyway, you might as well just get them from XPay. That way it's just return of capital. Just pointing out that maybe you can take advantage of some of those tax benefits of XPay. But getting back to the weekly leveraged ETFs, and they're coming out with a bunch of more. And they're also coming out with one on Berkshire Hathaway. Thought that was interesting that they put one on Berkshire Hathaway. But how are these actually working? Because we're going to take a quick look here to look at their possible P&L and what they're kind of doing behind the scenes and why I'm almost okay with this, because they're not guaranteeing you a direct pay. Let's take a quick look and break this down. Roundhill does not sell options on these weekly pairs. No options. No capping. Very important. They're also putting on 20% leverage. Going to go up 20% more than the underlying. That's important. It can also go down 20% over the underlying. So if you like something like Berkshire Hathaway, just think it's going to go up 20% more than Berkshire Hathaway. And these are reset leveraged weekly, not daily. There is some leverage drag that occurs, but weekly is different than daily leverage drag. Just pointing that out. But what I do like about this is how the distributions are calculated on a weekly basis. They're calculated using a proprietary formula. Okay, we'll just say, okay, Roundhill, you know, Brad likes math. Your proprietary formula may or may not be 100% safe, but it's going to reference the asset's performance and implied volatility. Thank you for telling me what you're doing, because now I can quickly do some mathematical calculations. The fund is non-diversified under the 1940 Act. If it's a 1940 Act fund, that means it's a registered investment company, meaning that they're going to pay you out 90% of all the gains. That is part of their P&L. And that is important because P&L plays into yield max. It plays into anybody that has any type of synthetics. That is why Brad tries to stay away from the majority of the synthetics, or the one that has everything in synthetics for the most part, because their P&L is different than something that holds the underlying. That's important to understand, because when they roll, they're rolling those calls. If there's profits, they're going to pay you out. They're doing nothing wrong. That's exactly what they have to do, but their P&L is different. And that's where you get into, let's not put as many synthetics as possible, because you're going to have that P&L roll, and when that happens, you're going to get a little more cash than you probably should have gotten. When you look at this, keep in mind, because of that leverage, if coin goes down 83.33% in a week, you can lose all your money. Will it go down 88.3% in a week? Probably not. Can probably take a good 20% hit very easily. Going down 88% in a week, we'll take a look at that. Probably not going to happen. But keeping in mind They're now, what I pointed out so far is their distributions being calculated differently than just a fixed amount every single week. It is going to be a varying depending on volatility and depending on performance of the underlying. What does COIW actually hold? And I picked this one just because you could have picked any of them, but it had some historical data, and that was what I was looking for. They, of course, hold a little bit of coin, but they also have a lot in a swap. Not a fan of a swap. That's why you won't see Brad putting all of his money into something like this, just because I want to know what's going on with inside that swap. And it's not 100% transparent, but I have a very good inkling what's going on inside that swap, because that is where the 120% leverage or 20% leverage. So it's a fund that has exposure of 120% of Coinbase. If I look at the distributions, well, you can see the distributions are all over the board. Up, down, sideways. How can anybody figure out what's going on with their distributions when you see it all over the board like that? And they are paying you this weekly. If you sit back and say, how did they do the 0DTEs? Well, they sit back and they don't pay the first week. So I sit back and go, let's see if I can correlate this to how the market is doing and correlation of the weeks to the weeks that they're paying. And lo and behold, when you start seeing green weeks, they pay more. And when you see red weeks, they pay less. I think that is really straightforward. Now, I did come up with a coefficient for this to say plus or minus a couple percentage points of what they're going to pay based on that coefficient. Now, I will also say the future distribution, because of that 21% move, may not be as high as it probably should be. They're probably holding back a little bit, but that's okay. They're going to end up paying you that out anyway. But let's take a little farther look into the funds. So Coin took a big hit right around that end of February when this came out. And you can see the COIW, and this is stock price change, also took a big hit. That's exactly what happened, and this is on price. If I look at total return, well, total return indicates a different scenario here. Total return, I'm right on top of Coin, which is Coinbase. So total returns, these guys are pretty much matching Coinbase. Now the question is, will Coinbase go up over time? Coinbase go down over time? It is a Bitcoin treasury. It probably has the opportunity to go up over time, but there's no guarantees in life whatsoever. Rex shares came out with their leverage funds. The bigger difference of it is that one, they're a little more transparent, in my opinion. They are synthetics. They're rating on Monday morning 125% of the cash that they have. So they're buying and selling those puts to create the synthetic. Then they sell the calls, the short calls, on 50% of the synthetics, keeping in mind that's about 62.5% of the fund because it's leveraged, and then 62.5% of the fund is non-capped. So when Coin this week went on a big run, we saw COII capture 50% of that, probably just slightly more than 50% in their actual NAV. And that is something to be said, because now you can start looking at this price change on a chart since COII came out. You can see that it is behind CIOW. Both use leverage, But COII gets capped because of those cover calls. COIW is just paying you out of the actual NAV. Because they're using that leverage, they have the opportunity to gain more money because it's leveraged, and then they can pay you out those distributions. Really like to see something like that on the S&P 500. Maybe one day somebody will come out with one instead of a single stock. I don't issue the ETFs, just saying out loud. I'd rather a little more diversity than a single stock, because I continue to say single stocks are riskier. But now you can start looking at this going, wait a second, they're using that leverage, they're going to be able to pay me out more. And of course, if I look at a total return chart of COIW over the same time period is 18%, where COII is only 9%, because they got that 50% cap. Just how it works. Now, at the end of the day, personal opinion here, end of the day, you can go either way. I am not going to get into any of the Roundhill funds yet. I think some of them are very interesting, especially Berkshire Hathaway. And I think that by taking 10% on these single stocks, that you can retire with a little less money, but you're going to live with a little more risk. Personally, I still believe in a very well-diversified portfolio where you have business development companies and preferred stocks. Even though preferred stocks will not beat these single stock funds, it just gives me fixed income, which kind of builds out not failing in retirement and having to go get that dreaded JOB. So hopefully you found this interesting. Please leave a comment down below what you think. I'm going to continue to share the journey of buying these single stocks. I'm not going to do anything with them. And BTCI will not be in the rotation of getting rebalanced. Whatever goes into BTCI will stay into BTCI. Everything else will get rebalanced sometime in August. I do believe it was the second week of August. And I picked that day just because it was just a day of the week that there wasn't any distributions coming in. So until next time, God bless.